Hello everyone, welcome to my channel. Today I just wanted to recount recent events that have significantly changed my perspective and plan for the next few weeks in terms of how I'll be approaching investing. The past week and a half, there's been a number of meme stocks. I'm sure a lot of you guys have already informed. There's a lot of hype surrounding it, and a lot of people really got caught in the wave. Some people were very experienced um, and educated and knew how to navigate that, and other people didn't, such as myself. So I ended up making a lot of rookie errors that were relatively costly. So I learned a lot. I learned a lot. Um, However, it's important that I learn a lot more before I start investing real money. So for the next 2 weeks to a month, um, I'll still be educating myself. Um, but the plan is to apply the things that I learn in a way where I'm not using my actual money. So there's a number of different services that provide a program that allow you to invest with essentially fake money. You have access to all the different stocks and you get to apply your strategies and see if it works. And I'll post a link in the bottom below. But I just want to talk about one important thing that I've learned so far. Um, this is kind of a basic technical analysis. Sort of fundamental analysis, most of you guys already know. Um, Sort of the primary objective is to get kind of an intrinsic value of the company. So you're looking at you look at qualitative data and quantitative data, right? You look at different ratios, get an overall understanding of whether this company is worth investing in based on their value. Is their value going up? Is their value going down? Essentially. Another part of fundamental analysis is technical analysis, and um, that's primarily used to determine at what point is a good time to invest in a stock. So again, you want to use analysis to determine what company is good to invest in, but you also want to use technical analysis to determine at what point is a good time to invest in, and that's what I'll be going over in this tutorial. Okay, so this is a stock chart for Next Innovations. I actually have a few shares in this company. Right now, I'm determining whether it's a good time to sell or hold on to it. So I'm just going to do a basic technical analysis and go over some of the core features that anybody starting off should know to give them an indication on when is a good time to buy and when is a good time to sell. But before that, I'd like to give just a background on the company, just in case for those who are interested in this company and may want to invest or do their own researching. So I'm on their website, their front page. It says we are an innovative materials company that designs, manufactures, and leverages disruptive technology to make plant-based products. Founded in 2015, the company leveraged 3D printing to design, prototype, and patent the world's first compostable single-serve coffee pod born out of the need to replace non-biodegradable plastic. Okay, so if you take a quick look, you'll realize that most of the points are above the moving average. Again, the moving average is, you can use that to get a quick overall idea of the health of the company or the stock. So if you find that it's above the moving average, that means that overall, in general, the price of the stock is moving upwards, right? If the bulk of the trend is below the moving average, that may be a red flag. That would be one red flag or one indicator for you to either do more research before investing or to move on to another company, All right. The next feature that you want to look for is areas of value. So again, now that we've established that this company may be a good company to invest in, based on the fact that overall the price of the stock is increasing and it's above the moving average, then you want to look at specific areas you want to pay close attention to as indicators to buy. Okay. So to further illustrate this point, I'll introduce what's called the area of support. And the area of support you could think of like a floor in the stock chart. It's a value of the chart where you tend to see the values of the stock not move below. Okay, kind of bad explaining that, but for example, right here, right, you can say the area of support right here is a little less than 2, and again, that's because the stock tends to not move below it, right? And then another idea is area of resistance, which essentially is the opposite. You can think of it as a roof, and that's where the stock tends to not go higher than, or tends to rebound off of. So area of resistance could be right here. See these high points, and it dips back down. Again, area of resistance could be right here because it goes down, right? All right, so when you establish areas of support, you also want to perhaps use a trend line. So all right, so I've managed to find a trend line. You can see, zoom out for you. Okay, so this would be the trend line. And you see how it hits all the dips, the lows right here. Okay, so it's similar to the support line, but the difference is that the trend line is diagonal and that the support line is horizontal. Okay, so right here, so you can say at 2, right, represents a higher area of value because that's when the stock it tends to be the lowest relative to the high points. Okay, so you may want to say, okay, I like this stock. It tends to have overall growth. I want to buy in, and these areas indicate that, okay, these may be a good price to buy in. All right, so the last step is determining at what point in the area of value is a good time to buy or sell. All right, and now we're gonna have to refer back to the candlestick plots, and just to give a summary. The green, the inside represents fluctuation. For the green, this indicates when it opened. Sorry, this indicates when it opened and when it closed. These indicates when it was at its lowest, and this is the highest. And for the red, this indicates the top part right here. This indicates the max, and the red indicates the when it opened, and the bottom indicates when it closed. Okay, and again, this is the max low. So if we move right here, let's move right here. Okay, so we know that February 1st or 2nd, the stock opened up here, and then when it closed, the value was here. Okay, this means that overall the sellers were in control, because when the sellers were selling, the value of the stock was going down, which is why it closed. So at that point, it wouldn't be a good idea to buy. But if you look at the next day, like I said, for the green, the bottom indicates when it opens and the top indicates when it closed. So as you can see that it closed at a higher value than, it closed at a higher value than what it closed here the day before, right? Which would indicate that the buyers overall were in power. Even if it's slightly more than the closing the prior day, if it's an increase, that means more people were buying. As a result, the buyers were in control. As a result, the value of the stock was going up. So that may be an indication for when your area indication on when you might want to buy in your area of value. All right, so just to pull it all together and kind of formulate a final strategy, this is what I would do, and this is what I might do in the simulator. Look right here, and I recognize that overall it's on an increase, right? I'm not exactly sure if it's going to go down, but what I do know is that the buyers are in control, seeing that it closed a lot higher than it did the day before. So if I assume that the buyers are going to be in control for tomorrow, I can buy early tomorrow and hope that it goes up, right? However, it's very possible that it may go down. See that the price went up, buyers are likely people likely made a profit seeing that it went up, so they may want to sell at a profit. As a result, you might see the stock go down. So to minimize risk or minimize loss, what I would do is apply a stop loss order. And essentially what that is it's exactly what it says. So you set it so that your shares are sold when it reaches a desirable level. So if it decreases, you buy it at 4.34, hoping that it goes up, but instead it doesn't, you can set it where your system will automatically sell it at, say, 426 or 427, right? So in this case, you may be taking a risk, but the risk isn't as great in terms of how much you can potentially lose if you were to buy in now while the buyers are in control. Okay, so that's it for today. Again, overall, this is just a technical analysis, very basic, but I find it extremely helpful in terms of orienting myself and identifying what are things that are meaningful in terms of when I should buy into a stock that I've already decided that the stock is a good buy. Okay, and below I'm going to leave a link in case anybody wants to try the whole simulator approach. And thanks for watching.